Welcome back to the Bitcoin Layer. I'm Nick Bhatia. In today's global macro update, we have to take a step back. So much is going on in the financial markets. Gold reaching $5,600 before falling down below 5,000. Silver up way above 100 and then crashing 30+% today. Bitcoin having a terrible go versus the dollar and versus gold over the last couple weeks. And then Bitcoin bouncing today, a new Fed chair, and what appears to be the reordering of the global monetary system. So today we're going to take a step back, zoom out, think about the narratives at play, why Bitcoin has struggled over the last 3-4 months, and much, much more. At the Bitcoin Layer, we try to maximize signal. That's why we deliver content across our research letter and this channel, so that you guys are able to see what we are seeing. We try to bring you primary sources, charts, lots of data, and then conduct analysis that is not hyperbolic. We are just trying to call it like it is. Thankfully, we're not a hedge fund or a trading shop having to put money on the line, but despite that, we still don't want to just spray narratives left and right. We do want to help investors seek better returns. That really is what we are here for. And so we're trying to conduct analysis at all times. Now, we can't get everything right. Nobody can. And with that spirit, we have to acknowledge where we are wrong, where we could be wrong at all times. And so today is going to be reflecting on some of the research that we've delivered, both in the form of this channel, but even stretching back to my days of being on the desk and then writing Layered Money, which is now about 5+ years ago. In Layered Money, I discussed a framework for understanding money called the hierarchy of money. This is introduced by a professor, Perry Merling, and you should go check out his books and his papers. They're fantastic. The inherent hierarchy of money, I thought, was an excellent way to describe how money exists today. It also helps us understand why gold is the foundation for the modern financial system, even though the connection was broken in 1971. Layered Money is a story about gold. It's an explanation for why Bitcoin is most similar to gold when you look at the financial sphere. It's not similar to banking instruments. It's not similar to equity. It might trade correlated to equities, but when you try to understand what Bitcoin is in the context of monetary history, it's closest to gold. It's a monetary commodity. And so gold has been part of my research from my days, actually, when I was in college and graduate school studying finance. I've always been fascinated in gold because I grew up in my professional life in a post-2008 great financial crisis world. I was in university at the time of the great financial crisis, and it spurred me to understand what is QE. Why doesn't the system use gold anymore? Why is gold going up here in this QE world? What are the reasons? So this has been part of my research for a long time. Despite all of that, despite gold being a part of my research, I've been a gold bug. I've been a silver bug before I was a Bitcoiner. And so I've experienced all these things. Despite all of this, I want to show you a tweet that I found, I dug up because I remember saying this from 2023 to show you guys it's not easy to know where the world is going and where all of this is going to unfold. We've been talking about China buying gold for many, many years at this channel and in my own writing, gold becoming more and more of a part of the monetary system. Yet despite that, in 2023, I cherry-picked a time frame and said gold is up exactly 0% over the last 12 years. Be careful out there with gold narratives. They are stale and misleading. Gold is and always will be beautiful, but has been replaced by ones and zeros, Bitcoin, from a monetary perspective, apolitical money. And how wrong I was for saying this. Now, this tweet itself is not me at this point in time trying to say gold will never go up in dollar terms, but it is putting Bitcoin in a superior light to gold with more of a blanket statement. And when I think about trying to deliver signal to you guys, and I think about this tweet from, about 2.5 years ago, it causes me to bring it up here, because what we have experienced over the last 9 months is something that I really could have never forecasted. And so this is the point of today's video, is that nobody knows what's happening. And as a good analyst and as a teacher, I have to own what my opinions are, where they've shifted through time, what I'm wrong on, what I continue to believe in, and what I change my beliefs, where I change my beliefs. So I drafted a bunch of notes for you guys today for this video, so that we can go over what I have believed in the past, what I believe today, if any of that has changed, and where I could still have blind spots in the future, because Lord knows I will continue to have them. Nobody can know. So with that, we'll move on from this bad tweet, which was trash. And if you guys are able to find this one, you'll see a desk buddy of mine. He has an Anon handle, called me out for cherry picking the date range. So shout out to him as well. Now, Bitcoin has done miserably over the last couple months. We can't describe it as anything else. And Bitcoin right now, guys, is trading $84,200. We are at block height 934,372. In the later stages of Friday, January 30th's trading session, several hours after a new Fed chair was announced, Kevin Warsh, we now have a Bitcoiner vice president, a Bitcoiner secretary of the Treasury, a Bitcoiner secretary of Commerce, and a Bitcoiner chair of the Federal Reserve. How far we have come from Senator Cynthia Lummis, the sole open Bitcoiner in the United States Senate, elected in 2020, started serving her term in 2021. And I understand she will not be running for re-election, so this will be her last year in office. But how far the electorate has moved in terms of United States being a pro-Bitcoin country. So very interesting developments. A little bit more on the Fed perhaps later. I don't have a ton to say on Kevin Warsh today. I will be discussing one of his comments here in a second. But we'll see how. I think the best thing for the United States government and its longevity is to assess its situation and address to what degree the Fed and the Treasury should be working together. I don't think that itself is a threat to the independence of the Fed. We have to define the role of the Fed, right? Abolishing the Fed doesn't seem to be in the Overton window. It might have seemed like that 18 months ago, 12 months ago, even 6 months ago. But it doesn't, we have a new Fed chair, someone who's been at the Fed, who wants to reform the Fed. He doesn't want to abolish the Fed. The Fed is going to take its new form going forward. I believe that it will look different than the past 20 years in the QE era. Warsh is very opinionated on the balance sheet and what the Fed should and should not be doing. But I think that perhaps it strengthens the Fed's independence in the future. We're all familiar that governments around the world are debasing their currencies. This means that they print their way out of their problems. In his new report, The Debasement Trade, James Lavish goes through this dynamic. And importantly, he points out why portfolios have to react to the debasement trade. Gold moves first. We'll see if Bitcoin can follow. On January 28th, join James Lavish and the Unchained team for another fantastic free online event. You guys can go to unchained.com/TBL to sign up for that free event. Again, unchained.com/TBL, and join James for a great Q&A to answer your questions on how this can impact your portfolio. Guys, I am asking you, please do not write your seed phrases down on paper. You risk losing your generational wealth. This is why we use Stampseed. Stampseed is a DIY kit that lets you hammer your seed phrase into titanium plates. These tools are professional grade. They withstand heat up to 3,000 degrees. They're fireproof, crush-proof, but most importantly, they're time-proof. They're compact and easy to hide. The hammer that they send you allows you to put your seed phrase deep into these titanium plates, not just scratches on the surface. Go to stampseed.com today and use code TBL for 15% off of your purchase. Okay, let's talk about what could be the causes of this current Bitcoin drawdown. Obviously, it could be a bull market correction, and in that way, we would get a bounce. It could be the end of the 4-year cycle. And remember that I believe that we've moved on from this 4-year cycle. We've talked about dampened volatility for quite some time. We didn't see the type of heights reached in this current bull market in 2025 that we had in previous years. And I believe in the same way, we won't have the same type of magnitude of decline. So perhaps a death of the 4-year cycle. We also are understanding from Dr. Stephen Perrineau the concept of log periodic in terms of Bitcoin's bubble phases. In short, in summary, the bubbles will get further apart from each other, taking longer to develop. And perhaps we're starting to believe in that type of approach to Bitcoin's cyclicality. So one of the reasons could be just that the fourth quarter of 2025 lines up with the 4-year cycle, and Bitcoin is now entering a 2-year plus winter. Okay, that's, of course, it's possible. But here are a couple reasons, potential reasons that I want to verbalize so that we're all playing devil's advocate. They are related in some way, but can be approached by themselves. The first is, what if Bitcoin's decline is the end of Bitcoin's run because we are in a revival of gold? And that gold is going to be the chosen one, and the world will just move forward with gold. So why do you need digital gold? Gold is going to be digitized. And by the way, Tether's gold holdings, my goodness, we've been thinking about this. I don't know how much we've spoken about it on the channel, but Tether having a gold vehicle that is acquiring tons, literal metric tons of gold and storing them in a Swiss vault is at the margin evidence that the world is moving back to gold even on new crypto rails. Gold stablecoins. This is a massive story. It's not being discussed enough. I believe that we're going to talk a lot about Shanghai and the Shanghai Gold Exchange today, but the don't sleep on Tether Gold either, and the move to a more physically delivered international monetary system centered around gold. And I said centered around gold. I didn't make a mistake by using that word. So what if it's the end for Bitcoin because gold is back? Now, I'm not gonna um, I'm not gonna make you wait till the end to know my opinion on this. I don't believe that's the case, but it it doesn't mean that it's not half true. So, meaning that is gold returning to the center of the monetary system? Yes. So what about this argument that gold is old and digital gold, Bitcoin, is the way of the future because we're going to be going digitally? And so why would we need a physical commodity when you can have Bitcoin that can be transferred instantly? Now, I believe that, but it doesn't mean the world is ready for that right now. And the price suggests that that is the case. The price of gold and the price of Bitcoin over the last few months have suggested that gold coming back to the center of the monetary system was not really priced in. Now it's becoming more priced in. So Bitcoin at $84,000 isn't Bitcoin dying, of course. And so for that reason, I believe in both of these things. Gold moving back to the center of the monetary system and Bitcoin still being digital gold and a path forward for the international monetary system going forward for the next decades. And this is why Bitcoin is a slow and steady adoption story. I've never been a believer in hyper-Bitcoinization. Now, I know I've said that on the channel and in interviews many times over the last several years. Hyper-Bitcoinization is not what I believe in. I believe in Bitcoinization. It is a gradual process. Networks take time to gather momentum. Bitcoin might seem old at 17, but it isn't. It's really young. And most of the world still doesn't really understand Bitcoin. Now that Wall Street half understands it, it appears that the adoption rate is higher. But, people would ask, well, what country is next to adopt Bitcoin as legal tender after El Salvador? My opinion back then was the same as it is now. I don't think that a lot of nations are tripping over themselves to make Bitcoin legal tender and to announce strategic Bitcoin reserves today. I believe all of that will happen in the future, but it's pushed back. It's not in a hyper Bitcoinization type of way. If it was hyper, you wouldn't have be 3 years later and no other major countries have done it. I still believe Bukele is a maverick. That's what I've called him. He's not the trendsetter. All right, a maverick and a trendsetter are not the same thing. So what if Bitcoin's decline is a revival of gold? I believe that is the case, but not at the expense of Bitcoin permanently. Of course, I do not believe that. Now, here's the other one that I've been thinking about for a long time. What if the fall of Bitcoin is... Let me start here. People have asked me over the years, what is the bear case for Bitcoin? Play devil's advocate. How will Bitcoin, in what world does Bitcoin fail? Well, one of the answers, the intellectually honest answers, is if the United States has sound fiscal and monetary policy, somewhat of a gold backing, whether it's theoretical, implicit, or explicit, and the trust in the dollar to maintain purchasing power skyrockets upward. If all those things are the case, then first of all, if all those things were the case, I don't believe Bitcoin would have ever been invented. And it would be extremely naive to think that all of those things, that the United States can go from fiscal, monetary, over-indebtedness, overspending, falling trust in the dollar's ability to maintain purchasing power, all reversed like that overnight. And now the dollar is great and it's a sound currency again. That would be insane to think that that can happen overnight, and that in that type of world, which Bitcoin probably wouldn't have been invented, that now Bitcoin doesn't have nearly the same value as it once did because it just won't be needed in the United States. And we all know that the United States is the biggest holder of Bitcoin. I'm not talking about the government. I'm talking about you, the people, you, the institutions, the IBIT holders out there. They're mostly American. Of course, it's a global user base, but the United States has the largest ownership of Bitcoin. So if now the U.S. dollar is great, it's a sound currency again, why would Americans need Bitcoin? It'll be relegated to non-dollar countries that don't have a sound currency anymore. Now, I'm trying to play devil's advocate so that you guys can think through, well, what are these theories true? Do we believe the U.S. is a sound currency again? Do we believe gold has moved to the center of the monetary system to the point where we don't need Bitcoin anymore? I don't believe 100% of either of those things, but we have to play devil's advocate to try to understand what is the sentiment in the market. Is it just a bull market correction? Or is it the beginning of a winter? Or is it the death of Bitcoin? That's the analysis. Now I will bring back a quote from our new Fed chair, Kevin Warsh, when he said that he believes Bitcoin is a police for the monetary system. Now that's a brilliant quote because it's true. People have always said that the gold price is 1 divided by N, and the N is trust in governments. So as N declines, the price goes up. Well, Warsh saying that Bitcoin is a police for the monetary system is the exact same thing. Spiritually, that is the same. Those things are equivalent. So forget that Warsh is our new Fed chair. Let's just address this idea that Bitcoin is a police for the monetary system. Well, if Bitcoin is going down in value, could you argue that the monetary system is doing well? By this argument, yes. And so when Bitcoin goes up, people are like, oh, it's got to be because fiscal spending, money printing at the monetary level, Fed QE, and yes, Bitcoin does respond to those things positively. So then if Bitcoin goes down, could it be less money printing, more fiscal discipline? Yes, it could be due to those things as well. So when we think about how will Bitcoin perform over the next couple years or the next 10 years even, are we in for 10 years of government discipline, no QE, meaning probably no financial crisis? Are those the set of circumstances that we believe in? And remember, investing is always risk-weighted probabilities. If it's a 0% chance that something will happen or a 100% chance, the decision is easy. But in investing, it's never that easy. It's always much closer to 50-50 than 100 0. So put a weighting on it. Well, I believe there's a 10% chance the United States recovers all the fiscal discipline in the world and doesn't need to overborrow, and the Fed won't need to monetize the debt because the debt supply relative to the rest of the world's wealth and GDP will decline. And I'm 90% sure that it's going to be status quo, or as Lynn Alden likes to say, nothing stops this train. Well, what if you're 60-40 still? What if you're 60% sure that nothing stops this train, but you're now 40% convinced that actually the dollar is going to get more sound? Well, in that 60% that nothing stops this train, what is the Bitcoin price in 10 years? Maybe $1 million or more. And you multiply that by 60. So 60 times a million. 60% times $1 million is 600,000. And then 40% chance that it goes to zero. Literally, you price in zero. And you add up the two weighted probabilities, you're still at 600,000. The price is at 84K. It's a no-brainer buy all day. So this is the type of analysis that I'm trying to explain to you guys that the professionals are doing at home and on Wall Street and at all these investment houses. Even if they're 40% sure that it all goes to that fiscal discipline is nowhere to be found, money printing will continue, even if that's at 40%, 40% times $1 million is still 400K. It's still a 5x return on your money. For a long-term minded investor, that's a very attractive bet. Bitcoin's return profile is and always has been asymmetric. I would laugh at people who had the analysis 5 years ago, 10 years ago about Bitcoin. It's either going to go to 1 million or zero. In some ways, it's a stupid way to explain Bitcoin to a new person or to even frame it, because it feels random. But if we do have to assign that it either goes to 1 million or if it goes to zero, then it's a probability distribution. So unless you are 92% convinced that Bitcoin is going to zero rather than 1 million, because that's the math. Unless you're 92% sure, Bitcoin is still valuable here at $84,000. Okay, let's talk about gold re-entering the monetary system and why the price has gone absolutely crazy over the last few months. And we will talk about silver as well a little bit, but silver is not coming back to the center of the monetary system, but gold is in many ways. So we absolutely have to cover it. I'm going to skip ahead in my notes here because I realize that I have to talk about this first. Now, the conditions for today's gold price and what has happened over the last few weeks in the monetary system with gold, the setup is a pre-Trump existence. So it's a pre-Liberation Day existence. It's before Trump was reelected. It actually has nothing to do with Trump's first term either, anything he did there or didn't do. So there is an accelerant to the process that I'm going to cover that, yes, of course, has to do with the who's in charge of the White House right now. But the conditions have nothing to do with it. And those two conditions are Basel III and the Shanghai Gold Exchange. So Basel III developed long before, basically Basel III is a post-2008 financial crisis response, and the rules just started going into effect over the last couple years. And yes, it's a couple years that Basel III has been being rolled out. And the Shanghai Gold Exchange is obviously many, many years old. And I'm going to pull up the exact date here for you in a second. So the Shanghai Gold Exchange started in 2002. The international board started in 2014, and that was the date that I was remembering. So about 12 years ago, that's when it allowed for international investors to take physical delivery. And then in 2025, in June of 2025, the SGE started offshore delivery of physical gold in Hong Kong. This has changed the game. So these are the conditions. And by the way, the offshore delivery, although it happened in 2025 during Trump's second term, it was always going in this direction. So that, again, these events over the last 9 months are more the accelerant. But the conditions are Basel III and Shanghai Gold Exchange. I'll come back to Basel III in a second because that is really the setup here. But I want to first talk about what I believe are the 6 events or moments from the last year that have officially reordered the world. Now, what I don't want us to get confused on is that it's these 6 events that change the world. No, that's not what I'm saying. It's these 6 events that have moved the world from what was a fiction that everyone knew was a fiction to the post-fiction world, which is the real world. Those 6 events in order, and it's not, a hard and fast, I just, kind of noted this to myself. Liberation Day, and then a few days later, the Stephen Myron dual public good speech, because that's the one that explained why they were doing this. It put the world on watch that we're about to reorder it. Then everything played out. Then toward the end of the year, you had the national security strategy. Then you had Venezuela, which certified that the NSS was for real. And then you had the Lutnick and the Carney comments at Davos. So really quickly, Liberation Day, the beginning of the tariff structure, but really the warning shot that the old ways are done. So not really about the tariffs. More about the United States moving out of the old system. Then there's the Myron speech, which described that the rest of the world has an opportunity to understand the framework for the tariffs. Then the NSS, which outlines the return to the Monroe Doctrine. Then there's Venezuela, which is, hey, remember that we brought back the Monroe Doctrine? We were serious and we're going to act now. Then there's Lutnick saying, the old order is dead, globalism has failed, and we're moving on. And then Carney saying that the fiction is over. And it wasn't a response to Trump. It was him addressing the middle powers, essentially Europe. It was a message to Canada and Europe that the old way is dead and you shouldn't grasp at fiction anymore. These are the 6 events that I believe capture the move from the era of the World Trade Organization to the post-WTO world, which we are clearly in now. I don't say it lightly that the WTO is died. That's a pretty serious accusation. And so, just so that we're being clear, I'm not saying that the UN is dead. Could it be heading that way? Maybe, maybe not. I don't know. But we do have to call a spade a spade. Now it's a bilateral type of world. It's not a world trade organization at all. It's a one-off world. And it's more realistic because China entered the WTO in 2001 and cheated. And that's the precursor to all of this happening. So, does the U.S. politically move toward a president who's going to dismantle the World Trade Organization and everything it stands for if the U.S. didn't let China in 2001 and China cheated its way through the WTO for 25 years? No, it probably doesn't happen at all. So keep everything in context here. So we've outlined the 6 accelerants, and now let's get back to the 2 precursors, which are the Shanghai Gold Exchange, but most importantly, Basel III. So without getting too deep into Basel III, if you want to understand why Basel is important here, we'll go through just a quick history lesson. Now, my second book, Bitcoin Age, covers extensively the role of Basel in all of this, in the global dollar system and the financial system. It's quite important. The origin of Basel and its place in the system is, first of all, it's a city in Switzerland where the Bank for International Settlements is headquartered. In the 1960s and 70s, the Eurodollar system started to take off. It's a system of offshore dollar banking. Banking in Europe that is denominated in dollars. Taking deposits is, of course, how it started, but then lending it out and then creating a world of derivatives. It was the specialty of London, and it started in 50s, but really took off in the 60s and the 70s. Then you had a financial crisis in 73, 74. Franklin National Bank, Bankhaus Herstatt in Germany. And that's when the Bank for International Settlements called the central bankers together and they said, we need some rules for the game. The Eurodollar system is crazy without any regulator. We need to establish a framework for international banking. Then you had a Latin American debt crisis in the 80s, new Basel regulations. Fast forward to 2008 financial crisis, now we have Basel III. So it's the third edition of these rules that really started in the 70s. Now in 1971, Nixon closed the gold window and gold left the financial system. In 73, currencies started free floating against each other. Gold was not part of these Basel regulations. Basel III reintroduced gold to the monetary system, made gold eligible for the risk-weighted assets of the bank. And here's the key. It doesn't have to be the metal, but the receipts that you have, that you declare as your asset, they cannot be futures contracts. They have to be tied to delivered metal. Otherwise, they don't qualify for the gold position within the Basel framework. Now, if banks are moving to put gold onto their balance sheet for adherence to Basel rules, they can't use the paper system of gold. And so if they can't use paper, and it's not just paper system, it's the futures contracts that just get rolled forever and are not related. They don't correspond to metal being held somewhere. They are a promise for future delivery, but they're not delivered metal. And now layer in the Shanghai Gold Exchange, which they are issuing receipts, whether they're called receipts, warrants. They are issuing pieces of paper that correspond to metal in vault. Those receipts do satisfy Basel III risk-weighted asset, Basel III regulations. So when you hear about London and the COMEX, so exchanges in London and New York, losing their pricing power over gold, what they're talking about is that delivered gold itself is happening out of Shanghai. And that is driving the marginal price. No longer the London and New York markets, because those are futures contracts, and the shady price manipulation games that may or may not have been going on, and I say may or may not because we don't have time to go into the gold price suppression scheme that has been well documented. You guys can definitely search gold price suppression scheme and go down your own rabbit hole there. That game looks like it's up. And we actually do know that we are aware that some of these large short positions that banks have had for many years have been covered. So they've now switched to net long. But that doesn't mean that the COMEX and London futures contracts, which are being rolled by certain parts of the financial system, because those parts of the financial system want to represent ownership in gold, those contracts are not the primary mover of price anymore. It's what the metal is being delivered for in Shanghai. And that's why people were watching the premiums that silver and gold were going for on these Shanghai Metals Exchange and saying, hey, the metal is moving there, it's going to lead the price higher. So the point here is that gold per Basel III is re-entering the monetary system, and the paper price of gold and silver has appeared to give way to the physical price. And that's this repricing event of gold from 3,000 to 5,000 over just a very short time horizon. This is a setup for a reintroduction of gold as collateral to the banking system. The banking system needs more capital, and now a mark-to-market gold helps the banking system's leverage ratios. Where could it help leverage ratios the most? Well, it's in the country with the largest official gold holdings, which is the United States. So now we start thinking about what it might mean for the United States to mark to market its gold holdings, because right now they're marked at about $40 per ounce. So at 4,000, right, we're at 4,900 right now on the chart. Just at 4,000, you're talking about 100 times, 100x mark to market versus what the US has it on their balance sheet. Why is it $40 an ounce, by the way? Well, when the gold price, when Nixon closed the gold window, the official price of gold was $35 and the London price was $40. And that's how they knew that the system was over. They couldn't keep it. The actual market price of delivered gold was $40 at that time. And the US had it pegged at 35. They weren't going to revalue it. And actually, their gold stock fell from 20,000 tons to 8,000 tons as Europe basically called the gold. They said, we have dollars, you have gold, I'm going to exchange, I want the metal. And the US had to close the gold window. And that story is included in my second book, Bitcoin Age. So Bitcoin Age is it's a really good background to this world of Basel and the Eurodollar system, and how the dollar system is really a global system. It goes on outside of the United States just as much as it does inside. So is the United States headed for a gold revaluation? That's something that we're going to be thinking about a lot more, and what the impacts might be. The world is changing very quickly, and a lot of the point of explaining those 6 events that accelerated this world, the point of that is for us to sit maybe 2 years ago and speculate that the World Trade Organization would be dead in 2 years, and what might that mean for the gold price and the Bitcoin price. It seemed, or it wasn't in the discussion at the time. So now I'm remembering reading books by Jim Rickards 15 years ago about how the United States will push the market price of gold to $10,000 and then restrike its balance sheet, mark to market, and completely deleverage the Fed's balance sheet and the United States balance sheet based on the quantity of money that had been created over the last. And that was before most of the QE had happened. When he wrote that book is called Currency. His first book was called Currency Wars. Very helpful to understand important financial history, and quite speculative in many ways. And it appeared to be wrong for a long time in this specific arena, like the future of gold. Speaking of the future of gold and the future of the United States balance sheet, and all of a sudden it becomes reality again. We discussed Tether Gold. I think that is a very material story in terms of gold being delivered and that delivered price really setting the marginal price. It also speaks to why Bitcoin is still, it's part of the equation going forward, because Bitcoin is a neutral reserve currency like gold is, but even Tether Gold has counterparty risk to Tether and the insurance apparatus it has around it. It doesn't mean that it's risky. It's not risk-free. Obviously, you have this, legal risks and these qualifier risks. But everything has risk in the financial markets. And so if at the margin people buy Tether Gold and then gold moves into Tether vaults, that is a cryptoization of the gold market. And then what becomes a neutral reserve currency that you could swap in and out of Tether Gold if you're worried about counterparty risk? You can go into stablecoins, but those also have counterparty risk. So you can go into Bitcoin. So Bitcoin still in that layered money framework as the reserve currency, it's what you can swap in and out of really easily and then take custody yourself. So that's the unique proposition that is Bitcoin. I only think that strengthens over the years and increases due to all of these developments, including Tether Gold, which has a chance to become absolutely massive, if we're being honest, and thinking about Tether's track record and its success. Now, a couple things. Number one, I shouldn't even say number one. We're already almost an hour into this thing. I have a few other notes on gold and silver and China. The Chinese silver export ban seems to be material to me. It happened on December 31st. Metal was not allowed then from that point forth to leave the country. I don't know what the status of the metal is. Is it being held on ships or at the port or at the ports there in China and being prevented from leaving, or is it not? I don't know the answers to those questions. There is a CNBC article about this silver export ban. And then there are these rumors of JP Morgan and Goldman Sachs moving gold operations to Asia or sending these parts of the bank to Asia that have to do with gold and silver trading. So when we read an article on Bloomberg about the gold price, the price of gold today hit $5,000. It's rallying on a worry about Fed independence, President Donald Trump's threats to Europe over Greenland, and strong, retail buying. These are, some of they give you reason A, reason B, and reason C for the gold price going up. And those things might be right? The United States becoming more aggressive in international policy makes people dump dollar assets for gold. Sure. We obviously know about a lot of retail demand in China. That can be a reason too. But when we think about what's really happening behind the scene, we're not being told. None of these articles about the gold price going up have to do with Shanghai versus London. None of them mention Basel III, which is ridiculous. And none of them are mentioning that JP Morgan up and moved its gold desk from New York to Singapore, or that there was an airplane that went from the United States to Hong Kong to try to secure silver metal before the export ban. Give me some real reporting on these events that are actually happening, that seem to be the real drivers. Now, can we actually expect the mainstream financial media to do this? No, we cannot. So we are forced to conduct the analysis ourselves and to rely on other people in the know, people in the gold market. Obviously, we are not gold analysts ourselves here at the Bitcoin Layer. We are rates analysts and Bitcoin analysts. And so we have to pick our battles on what we are reading. Now, these 6 events that I believe accelerated our move from the WTO world to a post-WTO world. Again, Liberation Day, the Myron speech, the national security strategy, Venezuela, and then Lutnick at Davos and Carney at Davos. This is the setup to understand that we're at the end of many eras and the end of a really great fiction. And so I want to recommend a podcast on this specific topic here. These guys spent 40 minutes talking about the Carney speech. They are Jacob Shapiro and Marco Papich. Now, Jacob has appeared on the Bitcoin Layer before a couple times. He's a great geopolitical analyst, covers stuff that we don't, from an angle that we don't, to be very frank. A very well-read individual on these items. Marco Papich is somebody that I go way back with. He would come to see me when I was on the desk, when he was part of BCA Research. Marco is a geopolitical analyst as well. He's an author. His book is called Geopolitical Alpha, which I recommend. It's excellent. And these guys get together and they talk geopolitics really as a corollary to their core jobs, but really they do it on the side for fun, which makes the show fun. Now, let me just be very clear here about a couple things with these two gentlemen. Marco Papich is someone I've learned a lot from going back to my days on the desk. someone whose opinion I value a lot, and someone who is very good at what they do, and someone that I don't always agree with. Let's just say that. And for Jacob Shapiro, I find myself learning from when he expresses his geopolitical opinions and then disagreeing with him a lot on some of the more domestic assessments. So this is not to say that I agree with everything that Marco and Jacob said in this podcast. However, the 40 minutes that they cover on Carney's speech just by itself are fantastic context for what we are discussing here today. So I do recommend their latest show. The show is called Geopolitical Cousins. The episode that I'm talking about was from this week, and I'll get you the name of that episode. It's called Bias the Sequel, and they did say that they should have renamed it, but this is from January 28th. Their episode from January 28th. So we'll provide a link for you guys. We'll provide that link in the show notes for you guys. Now, I've expressed to you guys that I still believe Bitcoin in its role. It's intact. So the bearishness in the Bitcoin price, of course, everybody's looking for that dip. Bitcoin gave up its trend line in November. It's been hanging on. It has not recover. It has tried to recover actually several times this trend line. That's why I using the word dancing to describe Bitcoin's price, dancing around these support levels, still putting in higher lows, but at a very, very dangerous point. And actually, once it crossed below its trend line in November, it's been very perilous for Bitcoin, no doubt. We don't know how deep, the bear market correction here is. But that doesn't mean our thesis has changed. And that's really what I want to express to you guys today. Now, what about Bitcoin versus gold? When is that going to bounce? Well, gold is down $800 today from its peak. So that does help the Bitcoin to gold ratio. Bitcoin to gold, will it bounce? Will it bounce soon? And when will the bounce signal the end of Bitcoin's correction here? Possibly, yes. We'll continue to watch that chart. But again, gold stepping into the center of the monetary system through these confluence of events, or this confluence of events, I should say, it is dramatic to watch. It's welcome, thinking where the financial system has gone post great financial crisis, and thinking about the world of gold coming back into Basel III regulations. It was only a matter of time that this type of revaluation was going to occur. We just didn't know that these trigger points would be happening during the last 9 months. So that, that's why Basel III is the condition, and then these trigger points really move us there. So is that now yesterday's news, and does Bitcoin recover versus gold? Possibly. That's something that we're going to watch for sure. So what is this new world, this post-WTO world? I want to say a couple things about this. I'm not going to call it the New World Order because I feel like that's a really inappropriate name, because it was actually the name that the globalists gave their world order. Go watch George H.W. Bush's speech from 1990 when he was the president of the United States about the New World Order. So I'm not going to call this the New World Order. That was the New World Order. Actually, that New World Order is over. So this new one, I'm not going to call it the New World Order, even if maybe the mainstream media has started to. I don't have a great name, but I'm not going to call it that. In this post-WTO era, it is a a revival of political realism, which is going to be centered around minerals, commodities, and that's why gold and silver, right? That is why gold and silver and copper are having these types of rallies in the metals, is that in this breakdown, in this bilateral period, minerals cannot just be sourced from a WTO free market willy-nilly. They have to be arranged. They have to be planned for. And so would it drive up the price? Yeah. So we're in a United States-China Cold War, a minerals first world, and those are the conditions to put on our analysis. Bilateralism, importance on minerals, importance on raw materials and natural resources, energy included, food included, metals included. Thanks for sticking with us today at the Bitcoin Layer. Make sure you go to thebitcoinlayer.com/subscribe. Consider becoming a TBL Pro and gaining access to all of our research and our incredible new research dashboard where you get maximum signal, bunch of charts, TBL liquidity, all in one place, all at your fingertips. I'm Nick Bhatia. We'll catch you guys next time.